JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 26th of July, 2022. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can check out, and I believe you can find some useful information around here. Now then, guys. The first one I want to pick up here is Nikkei 225. So yep, looking at this picture, yes, we are still on a little decline, so which is all fine, to be honest. I mean, as I've mentioned to you before, that as anything kind of up until here, up until this upside line, this 208 EMA, anything up until that could be still classed as a little temporary correction before another possible leg of buying. As you can see, we got a nice hold up near that 27,524 territory. So yep, one of the levels kind of is working out, but to be honest, don't get me wrong, I'm not really jumping into those buys yet because again, I want to see if this is not gonna end up just trading around here for a few days and then before, let's say, popping further up. Now, of course, everybody's going to be watching this week, especially tomorrow, the news, the interest rate decision from the Fed. So currently there is an expectation to raise the rates by 75 basis points. Initially there was an expectation for a 100 basis points, but now there's a 75 basis point expectation. So rise. So yeah, at the moment, I would say, of course, that's gonna be a lot of worries later on when the U.S. trading session is gonna start on Wednesday, and then maybe this, that whole kind of activity could roll into Thursday's Asian session. So maybe up until then we could see this one stalling somewhere around here, just trading around for a couple of days, and then yeah, maybe on Thursday it could make a slightly bigger move either to the upside or to the downside. But at the moment I would say, yeah, as long as it stays somewhere above this 208 EMA, there is still good potential for this one to move higher. So now then, jumping into Hong Kong's Hang Seng Index. Okay, so this one, looking at this picture here, I mean, yesterday I talked about this and I said that, look, maybe this could be forming a possible descending triangle pattern, but for that I would still need to see a breakout, through the lower side of it. So always when you have something like this, you need to wait for that kind of clear breakout first, and then we could consider the next kind of short-term directional move. So at the moment, what happened here is that, yes, the whole kind of descending triangle idea is not really, working out nicely here, unless maybe it's not this descending triangle that we need to kind of mark. Maybe it's this one right here. So again, sorry, not this one, right there from here. However, I would say that still both of those are tentative, and that's not something that really kind of is something to monitor carefully. I would still suggest to keep an eye on these levels, as you can see here. For example, this, even if it is this downside line, still, if you're looking for some upside, a break of this barrier, the 21,111 zone, is needed in order to consider slightly higher levels. But for the downside, even let's say if this is the downside line, the one which we need to keep an eye on, still I would prefer to wait for a drop below that 20,216 territory right here, just to be a little bit more on the safe side. So in general, this whole area right here in between these two lines, it's just kind of, you know, not something that I'm gonna really keep an eye on that much. Okay, so jumping into ASX 200, just a quick update. So everything's, yep, so far so good according to the idea that the scenario that I mentioned previously. I said that, look, if we clear one of these levels, then we'll slowly start aiming to the upside, and we're currently aiming for that. Yes, 6,746 level was the last one that I was watching here. We cleared that one. We're now aiming to test this downside line taken from the high, the 20th of April. So everything's kind of, I would say, nicely in line with the idea. But if we start breaking this downside line, now that's where it could become a little bit more interesting for a few more buyers. We could aim for that 6,920 zone then, but if that gets cleared, yes, aiming further for that 100-day EMA or that 200-day EMA. So keep that in mind. But of course, at first, what I'm going to look at here is this downside line, and to see if it's going to hold or not. The German index, DAX, guys. So yesterday, look at this. I mean, so far it's doing the job. So yesterday I've mentioned this idea of a possible bullish flag pattern here. So yeah, maybe it is doing that, maybe it's not. Again, of course, if it is doing that, it could be an interesting one later on for the bulls. However, still a breakout is needed above that 13,378 territory, just to be a little bit more on the safe side, or maybe even above that 13,444 level here. So basically, in other words, above this highlighted territory, that's what we need to see a break off first before aiming further to the upside. And let's not forget that this move higher could still be classed as a temporary correction before another possible leg of selling. At the moment, like I said, it's unclear. It could be, like I said, yeah, it could be the bullish flag here, but will it be that? We'll have to just wait for a breakout above this highlighted territory right there. With the downside, 12,828 territory, that's what I need to see here, a break off in order to go lower. Yep, good morning to you too. I can see you there in the chat room. Good morning to everybody else who's joining in as well. So hope everybody's having a wonderful start of Tuesday. But in terms of the Dow Jones Industrial Average, this is me smoothly moving into that. Basically, with the Dow Jones Industrial Average, okay, so the top three indices, so the two ones that were able to close in positive territory were Dow and the S&P. Nasdaq was the laggard, and they closed in the red. However, the Dow and the S&P managed to squeeze back into positive territory just by the end of the trading session. Looking at this picture, you can see that, yeah, it's still flirting with that barrier, that 32,000 mark. I would need to see a nice good move above that area in order to go higher. So basically, yeah, in order to push through this 32,053 territory, I need to see a nice good push above it first in order to go higher. With the downside, I would need to see somewhere a drop, and this is where I think I need to redraw some of my lines here. I think I haven't picked up on Dow for quite a while, but with Dow, it would be better to maybe wait for a break of this upside line. I get it, we're missing out on a bit of territory, but let's put it this way: if you're looking for something short term to the downside, I would say drop below that 21-day EMA would be needed. The yellow line right here. If we do drop and stay below it, then yes, I'll go lower. I'll go towards this upside line, or even this 30,680 zone. If that gets cleared, then yes, further declines are possible, but we'll get to that point. First, I'm watching this. The cash index, let me just quickly double check. The cash index is sitting at around 31,871, 72 territory, something like that. So basically below yesterday's close, but still above this 21-day EMA. So in other words, the index could trade around somewhere around here for a while, but if it starts pushing through this barrier here, this 32,053 territory, then that's where potentially more buyers could join in. The S&P 500, so also I haven't looked at this one for quite a while. As you can see by the amount of different lines, probably it's easier to just get rid of everything and start fresh. Now before I start drawing any downside or upside lines, you can see that we have moved nicely. We're now, let's say, after reversing here in around mid-June, we started forming higher lows and higher highs right here. So it's a good bullish indication. We could, we're trading above this nice upside support line taken from the low of the 17th of June. But let's see if this is not going to end up being something like this, basically something like a nice rising channel pattern. So let me just I'm going to capture this low here, and I think it could be the case here. Let me just nicely tidy it up. Okay. So something like this basically. So let's see if this is not going to end up being a rising channel. However, the other problem that I have here is this downside line right here. So in other words, there is potential for the upside. We could see this one climbing nicely to the upside higher. We are trading above some of the key resistance barriers, like for example, where's my horizontal ray? There we go. So for example, this one right here, which is acting also as a good area of support, this 3,946 area. That's the high of the 28th of June, the inside swing high of the 28th of June. It's currently providing good support. So we can continue moving higher, basically, and within this rising channel. So in that case, let's say if we do drop below this 3,946 territory, I'll aim for that 21-day EMA, and if that gets cleared, then certainly the lower side of the rising channel. But at the moment, it's sitting comfortably above this 3,946 territory. If it continues to trade here, then maybe we could even see a nice breakout through the upper side of the this range channel. But in that scenario, I would prefer to maybe wait for a push above that 4,012 territory, somewhere around here. That's yesterday's high, so a nice good pop above it would confirm a forthcoming higher high, and then we could ignore the upper side of the rising channel. We could then aim for the 100-day EMA and the 200-day EMA. So again, a lot of factors to consider here. Again, if you think that this one's way too complicated at the moment, I would say okay, leave it. Just find something what's more suitable for you guys. Because sometimes, to be honest, the most complicated is not the the most attractive or exciting or something. It just can make you kind of worry too much, and then maybe you're not going to get the result that you're looking for. So again, just one of those, like I said, if you do like to trade the S&P, so something for you to consider there. DXY, so beautiful move, slightly below the 21-day EMA. Okay, so you can see that this upside line is also doing its job and providing support. So yeah, it's at the moment I'm keeping a close eye on it, and this is what I was talking about previously with you guys when I was saying that you know look at this this upside line, and if we get a break of it, then maybe this could open the door towards lower levels, and we could move, we could go for that larger correction to the downside towards this upside line here, and taken from the low, the 10th of February. But at the moment, let's not rush into anything. Let's wait for that breakout if it happens. If it just rebounds, let's say another scenario for you to consider, for example, is we could drop lower, we could, you know, move heavily to the downside, but by the end of the session, if it, let's say, reverses sharply back up, then you'll just have yourselves a beautiful false breakout, and then we could, you know, go back to the upside. However, with the upside, I would actually prefer to wait for a push somewhere above this 107.48 level, just to be a little bit more on the safe side, and then, you know, do something maybe with the upside. But at the moment, yeah, I get it. Maybe some of you would say that we're missing out on a bit of territory here, but I'd rather stay safe than sorry. I want to say Google gold. There we go, gold. This one is a little bit annoying. Now, what I want to do here is probably tidy it up a little bit. So again, I want to get rid of this downside line. This one I'll still keep an eye on, and yep, this other downside line, of course, we need to continue monitoring it. But one thing, what I was saying before, that from the shorter term perspective, I mean, look, I mean, if we break this downside line and stay above it, then we could go higher a little bit. As you can see here, we broke the downside line, we moved a little bit higher, but then we drifted back below it. So it's actually not really respecting this little downside line, which, to be honest, I mean, that was expectable, but either way I wanted to see what's going to happen, you know, with it. But at this point here, with the levels, now the levels seem to be working out so far. So with the downside, as I mentioned before, I need to see a drop back below the 1714 level. With the upside, I would prefer to wait for a push above the 1744-45 territory, somewhere around here. Previously, it acted as a fantastic area for resistance, and now it's also approaching the 21-day EMA, which, you know, so it could also provide resistance. However, if all this gets broken, this is where my arrow has to go here. If all this gets broken, then yes, we could go higher up here, or should I say, for a larger correction to the upside. Now, this downside line is a little bit tentative. Now, I would love to do it this way. I mean, I could keep this like that, but actually, why not? Why not? You know, so at the moment, yeah, I mean, if we do climb higher, if we do break this 1944 territory, then yes, I will aim for this my newly drawn downside line, which, if holds, could, you know, do something like this, which could force the bull step away here, and we could see, you know, the bears coming back in. However, in that point, what I would like to see then is, let's say, if we do see something like that, if we do see a move higher, we get a hold up near this downside line, and then we drift back down. I would consider the downside again only if we would drop, let's say, back below the 1744 level. But again, this is me getting ahead of myself a little bit. At the moment, I'm keeping an eye, like I said, for the upside, I'm keeping an eye on the 1744 territory. For the downside, 1714. Okay, WTI oil, so beautiful rebound. Look at this. I mean, I talked about this this commodity recently, and should I say every day. Yeah, that's the word for that. Recently, every day. Looking at the picture here, I mean, I said to you, especially yesterday as well, that look, maybe this is forming a descending triangle, maybe not, but at the moment it looks like one. However, you cannot really, let's say, you know, just assume that, oh, you know, it's going to go lower or something like that. No, you need a confirmation breakout. So at the moment, yesterday we flirted a little bit with my level here, the 93.56. But we climbed back up. Now we're pushing higher, but we're still below the downside line. So there is a hope still that, you know, we could see a decline. However, if that is the case, we still need to see that breakout below here. So in other words, as long as it's still here, I'm not touching it, I'm just observing it. And even if it breaks, now this is where the interesting bit comes in. Now, if we do break this downside line, I will start slowly aiming for the upside. However, let me just adjust this level here. I think that, yeah, this is no longer going to be needed. So I'm going to mark this area instead. I think, just bear with me one moment, this 99.95 area. So we're around that 100 level. So a nice good push back above the 100 level may lead to a move towards this highlighted territory, and this is where I'm gonna hold off a little bit, because again, maybe this is gonna end up being not a descending triangle but a nice little range. So again, you know, we adjust as we go ahead. So at the moment, yes, I'm watching this downside line. For at the moment, the priority is the descending triangle pattern, but if this downside line gets broken, then we can, you know, start maybe shifting our vision or views, you know, shifting our kind of scenario maybe more towards the upside. Bitcoin declined yesterday. Okay, so as I said to you before, you know, yes, we got that nice nice move to the upside. We broke the downside line, but to be honest, now it is shifting lower. Now this level here that I have drawn, this 1992, or you know what, we can round it up maybe towards the 19900 level in general. This level was the, as you remember already, the highest point of 2018, oh sorry, 17. That's the first rally that we saw here, the first massive rally. Of course, now when you look at it, I mean, compared to what we had here back in, you know, March of 2021, it cannot really compare much with this huge move in December of 2017 is just, you know, pennies compared to what we got here. But hey, everything's relative. You never know if you're gonna have something like that later on. But you know, we don't have the crystal ball, unfortunately. But either way, crystal ball or not, looking at this picture, what we can try to do is try to predict the short-term outcome. And at the moment, I would say this is trading nicely, nicely still above this downside line, but I think that we could be approaching this area, this 19,900 zone. So if we clear that, then yeah, I'll go to the downside, I'll go lower. With the upside, I would need to see a push above the current highest point of July near the 24,287 level, and then I'll go to the upside. I can see that I'm running out of time already, but I'll try to go through some of these pairs very quickly, because again, not going to spend too much time on them, but I just wanted to say that, look, this is AUD CHF. I talked about it last week, yesterday, and I said we were trading near this upside line. I said, look, wait for it, because maybe this is going to end up being an ascending triangle. But if the upside line would be broken and we would see, you know, the pair drifting further below it, then yes, ignoring the whole ascending triangle pattern. But now the ascending triangle is back on the table. Yeah, we're now clearing nicely this highlighted territory, so I'm leaning more towards the upside as long as it stays above this highlighted territory, which is around the 0.6710 zone. AUD USD, so also quite interesting. We've managed to reach my target, the downside line, and there we go. So can we go higher now? I mean, we did get a good move here already, broke the downside line. This downside line is taken from the high of the 5th of April of this year. However, we're struggling with that 0.6977 territory. I need to see a nice good push above it in order to go higher, because again, if we start looking at these candles, maybe this is a hammer candle, you know, maybe it could be a reversal signal here, but again, at the moment with the downside, I would prefer to wait for a drop below the 0.6854 territory right there, and then go lower. With the upside, I would like to wait for a push through this barrier and then aim for the 100-day or the 200-day EMAs. USD CAD, okay, USD CAD. beautiful move to the downside, beautiful break here. This is what I talked about yesterday. I said that, look, maybe we could be forming here a possible, head and shoulders pattern, but if it just struggles to move higher here and just decides just instead to break this 1.2860 territory, then yeah, my next target will be the 1.28920 here, 1.2820. If we clear that, then yes, we could go lower. For that, I would need to see a drop below the 100-day EMA. If we drop below this 100-day EMA and below this 1.2820, I am aiming further south towards that 200-day EMA, which is roughly on my chart here, which is roughly around that 1.2747 level. GBP USD, so also looking quite interesting, flirting with this 1.2056 territory. I need to see a nice again another good move above it in order to aim for this downside line. To be honest, that's pretty straightforward here for me. With the downside, I would like to see a drop below, actually below this upside line. Yep, and below this 1.1967 level as well. So again, this is the game plan. GBP USD, pretty straightforward. GBP CAD, we're stalling here. We have been stalling for quite a while, and we're trading lower. Yes, we're trading below all of the EMAs. In general, if you ignore all the levels here, you will see that in general we're drifting below all of the EMAs. An occasional pop happens above the 21-day EMA, but and then it kind of gets killed off, and it drifts back down. So basically, how you could look at this is like, let's say, given that we already had quite a prolonged decline, probably from around February of this year, at the end of February of this year. If you're looking for some upside, then wait at least for a push above that 21-day EMA. If we get that, and we get a push above yesterday's high, above the 1.5544, then yes, I'll go for the upside. But I'm going to be very careful considering these previous happenings here, where we pushed higher nicely above that 21-day EMA. It seemed all positive, but then reversed back down. So I'll have my stop loss, let's say, back above the back below the 21-day EMA here, just on a breakout maybe, and then we'll go from there. And finally, EURUSD. So okay, so this one's stalling again. It's not really doing much. So to be honest, I'm really neither leaning to the upside nor the upside. I need my confirmation, because at this point I said to you previously that, look, this 21-day EMA is doing a very good job providing resistance. Once we get a clear break through it, we could go higher, we could go to the upside, but if we don't get that, then this could hang around still here, so somewhere around this area. And for me, for the downside, I would prefer to see a drop below the 1.0122. And to be honest, don't be surprised if we see the same trading action today here on the EURUSD. Maybe it's saving itself up for for Wednesday. So keep that in mind. Today, in terms of economic releases, we do have the CB consumer confidence from the US and the new home sales as well from the US. So but the main action probably will come on Wednesday. So guys, that's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time. If you want to catch me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.